So the idea that we're trying to get here is that if we affect the value, we'll affect the value of the business by increasing the profit in the business, not only the percentage, but the overall dollar amount. So when we get involved in what we're trying to do for the person that owns it, let's just take a simple example of someone who has $1 million business. You know, they may have 5 employees, maybe a dozen employees, something in that number. Well, a relatively decent profit percentage, you know, the amount that they actually get to keep, the owner benefit, might be around 15%. That's relatively typical. It's not every business is like that. Some are better, some aren't as good. But let's just say, for sake of this example, that it's 15%. So what we're trying to do with our business in Prosperity Partners is help them make the business run better and grow faster and make more money on average. Someone who gets involved with us that's that size of a business, or $2 million business, or $5 million business, we'll help them grow the revenue, the top line number, by 26% year after year. And so if we just take that $1 million business and you grow it in 3 years, you'll have 3 to 4 years, you'll have a $2 million business. So let's talk about that. If you sell the business and the industry suggests that you're going to get 1 times or 2 times or 3 times the owner benefit as a result of selling the business, and you're making 150,000, but then we can take and increase the revenue to 2 million, even if the margin stays the same percentage. Let's just say it stays at 15%. Then now, instead of selling that business for 2 times owner benefit being $300,000, now you get to sell it for 2 times owner benefit being $600,000. And that doesn't bring into account that if we make the business more efficient, meaning it takes fewer employees to get the result, or we grow sales, or we refine the product mix or the service mix so that it's even more profitable, even a couple percentage points of greater profitability will impact the profit, will impact the actual valuation when it comes time to sell it. And that's really the notion. What we're trying to say here is that there are some levers we can pull, there are some knobs we can turn, some buttons we can push now that will have a high multiple effect when the business gets sold. And so that's what happens a lot of times when we do our work. And most of the time, frankly, because we find sources of capital, grants, credits, abatements, and those kinds of things that'll help to offset our involvement. Our work is free, you know. So that's really the overall thing that we're trying to accomplish when we plug in with a business that's trying to grow their profitability, because it really increases the value that the overall company has.